Hello students, in present video I am going to explain about fourth problem from bank reconciliation statement topic. I am making this video for degree students. I am taking this question from Kalyani Publications. Authors Jain and Naran. Previous videos links are available in the description box. Let us see the question first. From the following particulars, prepare a bank reconciliation statement as on 31st March 2016. On 31st March 2016, a merchant's passbook showed a credit balance of 5,400. A comparison of entries with the cash book revealed that he had paid in checks of the value of 600 rupees on 30 March 2016, out of which checks amounting to 240 were credited in the passbook on 2nd April 2016. He had issued checks of 1500 rupees before 31st March, but checks amounting to 515 were debited to his account after 1st April 2016. There was a debit in the passbook of 30 rupees in respect of bank charges and a credit of 25 rupees for interest on current account, but it was not recorded in the cash book. This is the question. Let us see the solution for this. From the following particulars, prepare a bank reconciliation statement as on 31st March 2016. So we have to prepare BRS on 31st March 2016. This is the format of BRS: particulars, amount, inner column, outer column. On 31st March 2016, a merchant's passbook showed a credit balance of 5,400. So bank balance is given as per passbook and it is a credit balance as per passbook, means favorable bank balance as per passbook. In case of favorable bank balance, while doing BRS, we have to remember some points. Firm records all bank transactions in cash book. Bank records the same transactions in passbook. In case of favorable bank balance, because of a transaction, if a bank balance is increasing, in cash book it will be debited and in passbook it will be credited. Because of a transaction, if bank balance is decreasing, in cash book it will be credited and in passbook it will be debited. Let us see the first reason for disagreement. A comparison of the entries with the cash book revealed that he had paid in checks of the value of 600 rupees on 30th March 2016, out of which checks amounting to 240 rupees were credited in the passbook on 2nd April 2016. Firm deposited checks into the bank. Value 600. Firm thinks that bank collects that amount, it is deposited in my account, bank balance is increased. With us cash book is there now. In cash book, firm increased 600 rupees. Cash book is debited with 600 rupees. In cash book debited means in passbook it should be credited. And when bank credits that amount, if really check amount is collected, if really that amount is deposited in firm's account, then only bank records in passbook. And 240 worth checks were collected on 2nd April 2016. So we are preparing BRS on 31st March 2016 now. So up to that date what happened, that only we should consider. So in 600 rupees worth checks, 240 checks were not collected by the end of 31st March 2016. Means remaining amount 600 rupees minus 240, 360 rupees were collected by the bank now. Therefore, in passbook credit side, 360 was debited by the bank. So there is a difference. Cash book is increased by 600 and passbook is increased by only 360 rupees. Now which book balance is given in the question? Bank balance as per passbook is given. So the rule is adjust passbook as per cash book. In cash book 600 is increased, no. In passbook, if you increase more 240 rupees, then 360 plus 240 becomes 600 rupees. Now two books balances are same. So finally our answer is in passbook we should increase 240 rupees. Increase means we should add. Decrease means we should subtract. Now 240 rupees we should add to that 5400. What to write here? What happened? We deposited checks but not collected. Write down that sentence. Checks deposited but not collected. Checks deposited but not collected. Amount in outer column 240 rupees. See the second cost for difference. He had issued checks of 1500 rupees before 31st March, but checks amounting to 515 rupees were debited to his account after 1st April 2016. Firm issued 1500 worth of checks. Issuing means giving to somebody. Firm has to pay 1500 rupees to suppliers. Instead of giving in cash, firm issued a check. So firm thinks that suppliers go to bank, they withdraw the money, bank balance is decreased. So with us cash book is there, decrease means credit side. So firm credited 1500 rupees in cash book. But bank debited 515 rupees in passbook after 1st April 2016. Means what? Till this date, 515 worth check was not debited in passbook. When bank records that transaction in their books, if really supplier goes, if really he withdraws the money, then only no. So out of 1500, 515 worth check was not presented in the bank till 31st March 2016. Means how much worth checks were presented in the bank? 1500 minus 515, 985. Means 985 rupees was debited in passbook till 31st March 2016. So this is the difference. Now which book balance is given in the question? Passbook. Rule is adjust passbook as per cash book. As per cash book, bank balance is decreased by 1500 rupees. Now in passbook also total 1500 balance we should decrease. Only 985 was decreased. Now more how much we should decrease? 1500 minus 985, 515. Then 985 plus 515, total becomes 1500. So as per two books, 1500 was decreased. Now this is our answer. We have to decrease 515 rupees in passbook. Decrease means minus no. So from 5400 we have to subtract this 515 rupees. And what to write here? Checks issued but not presented. Checks issued but not presented. We have to subtract no. Therefore amount in inner column 515 rupees. Third reason, there was a debit in the passbook of 30 rupees in respect of bank charges. So bank is providing so many services to the firm, not at free of cost. On particular intervals, from our account, bank deducted some amount known as bank charges. First, who knows about this? Bank, because bank is only deducting this amount. Means in which book it was recorded? In passbook. Which side? After deducting that amount, our bank balance decreases. Decrease as per passbook means debit, no? So bank debited 30 rupees in passbook. In passbook debited means in cash book it should be credited. And this is a reason for disagreement, no? 30 rupees is a reason for disagreement. Means what? We should understand that it is recorded in one book means not recorded in another book. He need not to mention that. So 30 was not credited in cash book. Now which book bank balance is given in the question? Bank balance as per passbook is given. So the rule is adjust passbook as per cash book. As per cash book, bank balance is constant, but we decreased. Now here also we need constant. So the amount which we decreased earlier, now we have to increase. Then both will get cancelled. Finally, as per passbook also bank balance is constant. Increase means which side? Credit side. 30 rupees increase. This is our answer. Answer is coming as increase. Add. Here we should write. What to write? Bank charges debited in passbook only 30 rupees in outer column. Before writing that, you may get one doubt. That is, debiting 30 rupee in passbook is correct only, no? Actually speaking, we have to update cash book. So as 30 is debited in passbook, firm also record 30 rupees on credit side of cash book. That is correct. Instead of doing that, why in passbook we are cancelling this entry? See, BRS we are preparing. We are not rectifying the errors. In first video, clearly I explained the purpose of BRS. So why BRS is prepared? On a particular day, when we compare the bank balances of cash book and passbook, if they are not same, then by comparing these two books, we locate the reasons for this disagreement. Whether we have located all those reasons correctly or not, to know about that only we prepare BRS. So BRS is a cross check. Suppose we started with the passbook bank balance. So these reasons for disagreement are there, no? Some reasons we add to this balance, some reasons we subtract from this balance. Then bank balance as per cash book should come. Suppose we started BRS with bank balance as per cash book. Then some reasons we add, some reasons we subtract. Finally, bank balance as per passbook should come. So my aim is, I started with the passbook bank balance. I should reach to bank balance as per cash book. Then whatever happened in cash book, according to that only in passbook also I should change, Then only bank balance as per cash book comes. So in cash book, 30 rupees was not recorded. But unnecessarily we recorded in passbook. Now if you cancel that, then only we can make passbook bank balance equal to cash book bank balance. No? That is why we are increasing 30 rupees there. Second point, bank charges debited in passbook only. In outer column, 30 rupees. Next, there was a debit in passbook of 30 rupees in respect of bank charges and credit of 25 rupees for interest on current account, but it was not recorded in the cash book. So in passbook, they credited 25 rupees towards interest on current account. This is current account bank balance, no? Favorable bank balance. On that, bank paid interest. So bank deposits that amount in our account. Our bank balance increases. Increase means credit side. So in passbook, 25 rupee was credited. In passbook, credit side means in cash book we said it should be debit side. But clearly is giving, in cash book it is not recorded. Even though that information is not there in the question, we should understand. Because in one book recorded means in another book not recorded. Now, bank balance as per passbook is given. No? Therefore, passbook should be adjusted as per cash book. As per cash book, bank balance is constant. But in passbook we increase 25. Now we should cancel that. Means again we should decrease 25. Then finally as per passbook also bank balance will be constant. Decrease in passbook means which side? Debit side. 25 rupees decrease. Answer is coming as decrease, no? Therefore we have to subtract that amount from 5400. Second point. Interest on current account credited in passbook only. Amount in our column 25 rupees. All reasons were written in the BRS. Finally, add these three amounts, 5670. Add these two amounts and write down the total in outer column, 540. From 5670, we have to subtract 540, 5130 rupees. So this is known as favorable bank balance as per cash book. Favorable bank balance as per passbook is given in the question now. Credit balance as per passbook is given in the question now. So our answer is favorable bank balance as per cash book. Nothing but debit balance as per cash book. So this is all about fourth problem from BRS topic. Hope this video is helpful to you. Thank you.